GM. GM. Today's lesson is going to be on the topic of patience. I've been listening to The Alchemy of Finance. It's a book George Soros wrote years ago. It's where he introduces his concept of reflexivity. I've read extensively about reflexivity. I know about it. It's how I trade. If you're in crypto and you don't understand reflexivity, you're really missing a big piece of the puzzle. So this lesson's not about reflexivity, but it's about something he said throughout that book. And if you just to clarify that, it's called The Alchemy of Finance by George Soros. As I've said before, a terrible person, but an amazing investor and trader. You can learn something from everyone. So it was interesting. And you also get this a little bit from the Market Wizards books. You know, I've recommended those before. Market Wizards by Jack Schwager, the author, where he just interviews top traders. Interviews legendary traders and investors, some unknown ones. And it's just good to get an insight into the mindset, the approach, you know, of some different types of traders. But back to the Soros book and the concept of patience. When he's talking about ideas, he talks about things like he stopped trading in I think it was 1981. He's like, I got burned out and I stopped trading in 1981 because I became interested in doing a research study, like a thesis. And he went off and done some thesis and some philosophy thing for 3 years. Can you imagine just stopping trading for 3 years because you feel you're not in the groove of it? And this is a guy who's made tens of billions of dollars, if not hundreds of billions, over the years. Probably the greatest investor alive in terms of just raw returns. And not just that, but then he would talk about, I had this idea that I was bearish on whatever, the Deutschmark. And it was in 1982. And it wasn't until 1984 that I realized that my thesis was wrong. And he's talking about how when he tries to predict the future, he tries to predict events, his hit rate is very, very, very low. And yet he still makes loads of money. Which obviously you all know is very important, because it's not about whether you're right or whether you're wrong, but it's about how much you make when you're right and how much you lose when you're wrong. You can have a very low win rate with favorable risk reward and be profitable. But the point I'm getting at here is, think about the fact that he's talking about how it takes 2 years for one idea to be considered wrong. And how many times he's mentioned this too, where being wrong on your timing could be up to a year. And as I was listening today, just give me a reminder, because I'm a much shorter term trader. And this applies for everyone. But I was thinking, if I'm wrong on an idea, I'm wrong in 3 days, a week. Because that's, generally the time frame in trading. But when you think about the concept of patience, you think about how these guys do it, and you have to think about, what did they do all day? This isn't exclusive just to him. In the Market Wizards books, you know this too. Stanley Druckenmiller, another legendary investor who actually learned under Soros, or went and moved and worked for Soros. Paul Tudor Jones, amazing trader and investor. And most of these guys, they make big bets over a long time frame. I'm talking year plus to multiple years to even longer. And like, that's it. They put a big trade on, and that's it for several months. They certainly won't tweak the trades every day. So what do you think they do? And you're like, oh, well, your automatic reaction is like, well, they're fucking billionaires. Like, they just go and play golf, and they fucking travel and do whatever they want and have this life of leisure. But they don't. They built themselves into that with the same style, broadly, Their style is still, has always been, investing over a longish time frame. People look at Warren Buffett, right? Warren Buffett is fucking $100 billion now or whatever he has. But his style was the exact same when he started. And his style has always been long-term compounding. And so for the first 10 or 15 years, he didn't have any fucking money. Because it was long, it only compounded over those years. So what do you think he did in that time? The level of patience required for these guys is incredible. But I don't think it comes down to patience like that. If you think about, imagine taking one big trade, which was Bitcoin at the bottom of the bear market, right? 16K. You just went all in. No leverage, just all your cash into Bitcoin. And then you sold at 73. Just imagine. You bought the very, very bottom, you sold the top. And that was November 2022 until March 2023. 2024. So that's a year and about 4 months. That's 16 months. That's all you did. First of all, that's a 5x return, right? That's give or take a 5x return. Let's call it 4, just to be on the safe side. 4.5. You have 100 grand. You've now 450. Just for doing that, nothing else. 16 months, 100k into 450. First of all, did you outperform that by trading throughout that time? You have to ask yourself, would I actually be better with long-term ideas? Then, of course, you realize, well, I wouldn't know, except with the benefit of hindsight, I wouldn't know to put all of my money in at that exact time at the bottom and then take it all out at the top. Correct. But even with that, do you outperform a 2x or a 3x over that same time frame? Because if you don't, then you should seriously consider the longer term position trading, taking big positions around certain ideas that take a long time to play out. Because in those type of systems, you have a far higher win rate. Because you, in crypto, that is. Because as long as you get one thing right, which is the general direction, then you can wait. Because what a lot of people would have done in October 2022, when the stock market bottomed, crypto also bottomed, but it was at 20k, and it started to rally up. A lot of people would have went all in at 20. And then November, of course, FTX collapsed and we crashed to 16. But fast forward 2 months, it's back above 20. So if you're viewing it with a long-term mindset, that 20k buy-in, even though it wasn't the very, very bottom, was within 3 months of the bottom. And in a 16-month trade, that's not bad. But would you have the patience? Most people don't even have the patience to watch their fucking long trade go into a negative profit on a 1 day chart for a day. They can't even hold the position for a week. And the point I'm getting at here is that it's not about getting to a point where you can do it. A lot of people think, myself included, when I started trading, I thought, I'm going to day trade and fucking trade super hard and super aggressive and screen time, trading every day, make more money, make it as fast as I can, grow it, build it all up, doing this, super high frequency, right? Loads and loads of trades. And then, once I've made a bunch of money, then I'll just sit back, I'll take a few swing trades, I'll take a couple of trades a month, and I'll just grow it slowly. But it's not what got you there, right? So people always think this, I'm going to grind it, and then I'm just going to switch to nice, easy position trading. But it's not fucking easy. When you're used to trading 10 times a day, it's not easy to open one trade, watch it go down for fucking 3 months before it goes up. You don't just magically switch to that style. Soros was good at that because that's what he started at. Druckenmiller was good at that because he started at it. Buffett started that way. So it's just meant to make you think. Think about the time frames. Like, these guys talk in decades. and take their positions based on that. And they wait for so many things to fall into line before even getting into a position. And it's not just because they have billions. They did this when they had millions and less. You don't have to be that person. If you want to trade more frequently, you can. I know all this. I've listened to these guys. It's a nice reminder for me, but I'm not going to change. I'm not going to suddenly go long-term only. I still trade short-term. I have systems. They work. They're good for it. I'm good at it. But it's a good reminder that whenever you feel like if your coin isn't moving within 3 days, that it's fucking slow, fucking need you. There's people that wait years for a setup. And if they can do it, why can't you? Why can't you wait a week for your setup? Why do you have to rush into a trade today? If you see a coin break down, you want to enter right away in a short, but you know the most likely path is for it to bounce because it's left in inefficiency, and you're on a fucking 15-minute chart, why are you entering? It's pure impatience. Why can't you wait? What are you afraid of? You're afraid it's going to go down. You're going to miss the trade. Well, so what? A big part of patience is missing trades. If the move has happened, you have to wait for the next confirming move, whether that's a day, a week, a month, a year. And frankly, you need more patience on the short term. Because once you adapt to something, it's very easy. Once you adapt to the idea and the style that, Soros and Druckenmiller trade, it's very easy because they'll build their lives around that, right? They'll spend a lot of time researching. They'll read a lot. They'll do meetings. They'll build reports. They'll do research reports. They'll talk to people. They'll have analysts. They'll spend 99% of their time studying things to then take a trade. And so their life is built around it. And so their life is built around patience. Yours can be too. Most people can't get better at the market because they're too in the market. Most new traders fail because they never learn. They don't give themselves time to learn and study because they straight away start to try day trading. Okay, cool. But if you're taking 20 or 30 trades a day within a few months of starting, you don't have any time to learn about your own mind, about the market, about systems, about research, just the general conditions, what affects them, what's going on. Like, there's so much you need to understand in the whole bigger game. And that's not to say you can't do the day trading or do that style. Absolutely do it. You don't have to become a fucking Stanley Druckenmiller. But you should understand from them the slow-paced nature of their decision-making. Nobody here needs to make lightning-fast decisions. You're not a fucking high-frequency trading bot. Outside of news scalping, where fast reaction times matter, even if you're a day trader, who's waiting on a trigger, that trigger is going to come on a 1 minute, 5 minute, 15 minute chart, but it's not based on a 1 minute candle close, right? It's going to be a consolidation has to happen on a 5 minute chart. A consolidation on a 5 minute chart is going to be 30 or 40 minutes, easily. 6 or 8 bars, easily. And then a breakdown, and then you short the breakdown. Or a breakout, you short the breakout. Like, that requires patience too. Do you understand? To see, I know there's something forming, I really want to get short here, it's almost lined up, but I'm about 40 minutes away because I need to see a consolidation and then a breakdown. I can't short while it's just candles down only. I need to see it go sideways to show that it's consolidating, confirm that consolidation is bearish, then we short. That's 40 minutes. 40 minutes is a long fucking time as a day trader to not click any buttons or make any mistakes. So, think about those guys. Think about what I've said while you're doing that, regardless of your time frame. Patience. It's crucial, and you can build it